All right, let's do a trade day recap. It's Wednesday, September 17th, FOMC. I did not trade the morning session. Um, it's not typically something I do on FOMC. I wait for the FOMC news to drop. And so when I came into the charts today, well, I guess the first thing you'll notice is you'll see 4 position tools and you'll see 0 execution errors. I'm logged into my account. You can see on the screen my TradeOvate, there is 0 P&L on any account. And that's because I didn't take a single one of these. And I wanted to take a look into that and determine why that was. And I think there's something really good in here for traders to consider. And part of what I'm good at is more in-depth analysis and understanding why things happen and then correcting them or changing them for future improvements or not. Sometimes when you understand why something happened the way it happened, you're actually happy with your performance. So I'll let you be the guess as to if I'm happy that I missed 4 trades today, or if I'm upset that I missed 4 trades today. Now, just start with a quick higher time frame analysis. Running in, you can watch the live video if you want. Going into the FOMC news, which was at 2 o'clock. So here's this candle right there. I was anticipating price to come down into this fair value gap. And I was thinking that it was going to consolidate this afternoon and then dump down into this fair value gap when the news event released. Well, it actually came down into that fair value gap a little earlier than I had anticipated. Now, if you look on the 4-hour chart, I had 2 arrows initially set in. Here, one, I thought it might come down to the fair value gap, bounce off of that support level and continue for this inefficiency here. Or I thought it could also come for these beautiful equal lows down in here before continuing on bullishly. And for me, any 4-hour closure below this was a line in the sand for bearish price delivery. Well, what ended up happening today was price came down into my first level, which was the 1-hour fair value gap, and this is the lunch hour. And it did exactly what I thought it was going to do. It created my model bullishly and provided a handsome, probably, depending on if you held, 5R trade. I would have TP'd at 2R, but again, I wasn't going to take a trade before FOMC, and I also wasn't in front of the charts. But it was really nice to see that the model played out right there, especially his PA's been a little undesirable lately. So then going into FOMC, which was this dot here, 2 p.m. Press release, price came up into this midnight open level, and on ES, it actually took the London high, which is this purple line, which is exactly what I wanted to see. I wanted to short NQ taking this London high. London NQ did not take that, so I was a little apprehensive. And whereas ES did, but nonetheless, there was an SMT there that would have met all of my criteria for a short. And as I was kind of looking at it, I wasn't certain. I didn't pull the trigger. Price then delivers all the way down to lunch low, takes another major swing down in here. I'm not going to mark it. You can just look for yourself. There's another swing right down in here. Took that swing, took lunch low, formed my model, an inversion, SMT, everything was there. I choked up on this one, and it ran to 1.6R. So depending on where I would have placed my stop, I don't typically use the swing. I was flip-flopping on that at the moment because with this aggressive price delivery, I would want to widen my stop loss a little bit. Normally, I'd tuck it more like right there. And had I done that, that would have given me the 2.5R. Well, anyways, I didn't take that trade. And I had it mapped out like this. And I'm kind of sitting here going like, oh man, what's going on? Here's a winner, which I wasn't around for. Here, I didn't take this and it was a winner. Here, I didn't take this and it probably was a winner or break even. Either way, it would have been a good trade. And so at that point, I'm feeling like, well, that's 3 in a row. What are the chances that I'm going to get a 4th trade as a winner in a row? And what do you think happened? Price came down, took another major level, which was over here on this other chart. That was the second level, this equal lows right down in here. It took this level. Came back into coming back to the 1 minute chart. And then it formed my model. I had a limit. I was getting ready to place the limit order and I choked up. I think I had the stop down here below that swing. And that would have been a full 2-hour trade, right? So what happened? And am I upset about it? Well, looking back, what I realized is the risk was too high for me on these trades. With the amount of movement in these candlesticks, and this might sound a little silly being that I'm on micros at the moment, but I've hardly traded in the last couple of weeks, maybe 3 weeks now. And so I wanted, in this account that I'm doing this payout challenge on, is it's in the green. So I didn't really want to get started off on the wrong foot. It's kind of like when I've noticed when I take breaks from trading, it takes me a little bit to get back into it. And maybe I make a few more mistakes than I would typically, as opposed to when I'm in the groove of things. So I hesitated because I wasn't interested in risking $100 per micro on each of these trades. And if you watched the live stream, I was kind of questioning myself. I was wondering, why am I being too conservative? Why can't I pull the trigger? Am I that gun shy? And I went back and I looked at it and I realized that was why. Obviously, I wasn't around for this one, but for these three, I was realizing the risk was higher than what I was interested in taking. And I think that's an important lesson for newer traders, is like, just because your setup looks perfect doesn't mean that it's perfect. And in this case, like this one right here, it was more risk than I was interested in putting on it. $100 per contract, I just wasn't into it. And so when I realized that, I realized I was protecting my capital, and I feel much better about my performance on this day. Because I came in today feeling like I want to risk about $50 per contract. That'll feel good considering I haven't even taken a trade on this account in like 3 weeks. I've taken a trade on another account in the middle of all of that, but not this account. This account has 0 trades on it in like 3 weeks. And I realized that, and that's self-control. That's one of the big traits that traders need to develop. Now, I can tend to be, I'll admit it, I tend to be even too far on the side of self-control sometimes, and that's my problem. I have trouble getting back into it. And that can be seen here in part because I just didn't take any of these trades. But there was a reason. You know, I certainly could have risked $100 per contract because that's well within my risk tolerance. On this account, I risked $200 per trade. But I didn't want to risk $200 per trade because I hadn't traded this account in a couple of weeks, whatever it's been, 2 or 3 weeks. I don't know. So it felt really good. I adhered to I was in integrity with my words to myself as I walked into this trading session today. So that's a recap of today. And I'm going to still take this lesson going forward into tomorrow. I feel much better about what I see here. But I'm also going to play both sides of this too, because I am, and I know my patterns of being too conservative when I roll back into trading after taking vacations and breaks. And I just need to get into it. And I also need to allow it to take time. So if today wasn't the day, that's fine. Tomorrow's another day. I'd rather have success getting started off on the right foot after taking that break than take 2 or 3 or 4 bigger losses right out of the gate and put some damage into this account that doesn't feel good. And then I got a worser problem on my hands than if I was a little more conservative with my trading. So I hope that helps somebody look at ways in which you can look at your trading and evaluate what you were doing and why you were doing it. And also putting importance on the amount of risk that's going into every trade and what feels comfortable based off of, your level of comfortability in the day. I just simply am not comfortable putting $200 on a trade right now. I just am not. It's been too long. So I'm going to have to grow back into that. And that's a lesson learned for me. But yeah, I look forward to tomorrow. I'm going to take this lesson. I'm going to write. So what I typically do is I take these things, I journal them. I'm documenting them here on YouTube, and I journal them in my Discord journal. And then I print them out and I make printed reminders that I then read in the morning, because I sometimes forget like all the things I want to try to remember. And so I'll be making a printed version of this, and that way I'll be sitting on my desk for tomorrow morning. I'll be ready to go, and I hope that tomorrow has price action that feels a little more comfortable, a little slower for getting back in. I can get my risk size the way I want it, and yeah, that's okay. I'm not in a rush to get to that payout. I'd rather take it slow and do it well.